Hello and welcome to Bloomberg Quint. Hi, this is Nikki along with Agam Wakil, and we are going to be wrapping up the market action for you. A good session of trade today. Nifty ends little shy of the lifetime high level but records second best close today, ends comfortably about that 10,000 mark. With this, let's bring in our guest, Natasha Shankar, Senior Vice President of Yes Securities. Hello, ma'am. With Nifty now ending little shy of that 10,100 mark, where do you think markets are headed and also the triggers behind the move going forward?
So we do think that on a long-term basis, the markets are on a secular uptrend, but in the near term, we could see a lot of consolidation happening. And the reason for that is while the downside gets limited or rather protected to a large extent by the fund flows, the upside also gets limited because of the number of IPOs that are coming out. We have almost 100,000 crores out of worth of IPOs which are going to be coming out in the primary market over the next couple of months. So you will see a lot of this liquidity which is there in the markets getting mopped up because of it. And till such time as we get into the September quarter earnings, which is when we'll start seeing the impact of the better monsoons as well as a good festive season, we think that the markets could remain in a sideways consolidation till then.
So you mentioned that we are going to see some amount of liquidity, but there is also the concern that valuations for a lot of these stocks are richly priced, and that could eventually lead to some amount of slowdown, at least as far as the domestic institutional investments are concerned. Would that be a matter of concern to you as well?
So I don't really think that the domestic institutional flows are going to slow down by any measure whatsoever. In fact, if you really dig into the DRHPs or some of the AMCs who have filed for IPO, you will see that even their own SIP book on a monthly basis is just 6,000 crores.
Right.
So that's a huge amount of funds coming in from a single AMC, and that is not even talking about the kind of SIPs which are already going on with the rest of the institutions.
Right.
So that being said, yes, valuations are slightly high if you're looking at a 1 year perspective, but if you're looking at a longer term perspective, let's say 2 years or 3 years down the line, we don't really think that the valuations are very rich. In fact, markets are fairly valued from that extent, and we should see the markets trending upwards. But yes, in the near term, they could be, just because of the lack of triggers as well as the primary market getting a little relatively more active, we think that secondary market gains could be limited.
Okay. Nikki, you want to take us through some of the key gainers as far as the Nifty is concerned today?
Sure. Before we go to that, I would like to address first about the primary markets, since we've extensively spoken about the IPOs. It's an action-packed week for the primary markets, Matrimony, Capacit, and then you have the ICICI Lombard IPO opening up in this week. How would you rank these IPOs? Anything attractive that you find?
I think the general insurance space is the space which is actually quite exciting for all the investors, be it retail or be it institution, just because of the scope of opportunity that exists over there. Now, general insurance penetration in the country is abysmally low, even if we compare it to our next door neighbors. If you're looking at Thailand, Singapore, even compared to that, our penetration levels are low. And given the increase in disposable income and the direct correlation which is there with the GWPI, that's the gross written premium, we think that that's a sector which is poised for growth, and the IPO should look attractive over there.
All right. Just giving a fair check of how the markets have done for the day. If you look at the first top gaining, we have the list here. The gaining is BPCL, GAIL, Tata Motors, Sun Pharmaceuticals. All for that matter, all the Tata Group stocks have done extremely well in trade today. But then topping the list, you have BPCL, which ended the day with gains of around 4.5%. On the flip side, you would see something in the like of Wipro, Hero Motocorp, IndusInd Bank. They've all ended the day in red with losses of around 1 to 2.5% Agam.
Right. As far as the futures and options space is concerned too, considering the fact that we've seen the Nifty move up and well above the mark of 10,000, we've seen a lot of writing in the 10,000 puts and the 9,900 puts. So we're looking at that base moving upwards, considering the fact that we have seen the benchmark indices move upwards as well. But that said, considering we have seen an up move in the Nifty Bank as well, my next question to you was to do with the banking space. And of course, in general, the consensus is very much with the private banking space. How would you pitch private banks as against public sector units?
I think that's a no-brainer, isn't it? Because the private banks have outperformed the PSU banks, both in terms of the stock price performance as well as their fundamental performance. Now, their asset quality has been quite strong. In fact, there have been hardly any concerns on the asset quality front. And they've seen the retail book grow quite strongly, even during the times when the corporate book was not so healthy. So now with the expected comeback on the corporate book side, they should continue to do well.
Right.
Now, on a valuation perspective, yes, private banks are richly valued, but we believe that they deserve the premium that they're getting because of the fact that they've been able to deliver better growth, better ROEs, as well as better asset quality overall. So we think that that valuation gap is going to continue, and yes, private banking is a space which most investors should continue to be in.
Okay. You want to take us through some of the mid caps that have been buzzing in trade today?
Before going through the mid caps, I think I'm going to talk about one large cap stock which has really grabbed all the eyeballs. I think it's Tata Steel. The stock is at 6-year high today after the resolution of pension scheme came through, which paved the way for the merger with the Thyssen Group. That's something that the street was looking forward to. Having said that, and the kind of uptick that we saw in the counter today, do you think that's an attractive bet going forward? Do you like that stock fundamentally?
So I think on fundamentals, you'll have to break it down into the domestic business as well as the chorus business. Now, if the chorus business, I think that has been the biggest overhang for the stock for many years, not just this year, but many years in the past. And if the deal goes through and that actually gets hyped up, probably in terms of fundamentals, Tata Steel would be one of our top picks within the metal space.
So that was exactly my next question. Apart from Tata Steel, BSE metal counter, I mean, the index as a whole has been gaining for 8th consecutive session. Apart from Tata Steel, anything that you like in that space?
I think JSW Steel is looking quite attractive. It's a domestic-facing steel company. The company has seen a better pricing. They've seen good demand. In fact, they've seen demand coming back. So that would be another counter which we would be positive on.
Agam, would you like to give us a mid-cap check?
Sure. So in the mid-caps, again, what we're looking at in terms of advanced decline ratio, we have about 2 gainers for 1 loser. This, of course, is the Nifty 500. And in terms of gainers, we have Devi's Labs, Adani Transmission, and Tata Coffee, followed by Godrej Properties and Sundaram Fasteners, all gaining well over 8%. On the losing end, however, we have seen weakness in Quality and Advanced Enzymes also moving down by 5% on the back of weak earnings. Rain Industries, Central Bank, as well as Federal Mogul looking at a little bit of profit taking. But on the whole, it's been a steady day of trade when it comes to the broader markets. I did have another question on the primary markets. We have seen a lot of subscription and some tremendous response for a lot of these IPOs. Now, a lot of these retail investors are not allotted a good amount of the IPOs. What do you do? And I know, again, it will depend from IPO to IPO, but once the stock lists, how do you decide whether or not you want to go in and buy at a premium after the listing as well?
So I think the principles of investing remain the same, whether it's a primary market or a secondary market issue.
Right.
If the investor is convinced about the fundamentals of the company, if they're convinced about the growth and the valuation is attractive, then please go ahead and buy the stock. It really doesn't matter what premium it is at, because you did not get it during the primary market.
Okay.
You can invest in it whenever that happens. Having said that, most of the IPOs, if you track them over a longer period of time, even the best of the IPOs that have come out, barring a few,
right,
we have seen prices correct, right, and they usually do give investors that one opportunity to get back into it.
Right.
Probably retail investors could use that opportunity if they really want to start timing their purchases. But otherwise, as and when they're available at good valuations, just go ahead and buy into it.
Right.
Cement stocks have been doing extremely well, Agam. Past 2 to 3 odd session, we're seeing all the pan-India players as well as mid-cap space doing extremely well in the cement space. Something in the likes of Ultratech, ACC, Ambuja Cement, they all were up in trade today. Natasha, my question to you is, at given valuations of 20 times EV to EBITDA, do you think these counters are still attractive, or do you think the valuations are quite lofty at given point of time?
I think you still have those pockets of good valuation available, particularly within the mid-cap space. You have companies like Prism Cement, where the valuations are still relatively more attractive if you compare them to the larger cap peers. But having said that, yes, the valuations are stretched, and we would really recommend buying in only during any dip.
Another pocket of where a lot of traction has been garnered over a period of time is real estate developers. Now, Suntech Realty, you have something in the live of Peninsula Land. All these stocks have been doing extremely well. Your call on that?
We prefer to stay away from the larger cap names. We've actually been we were very bullish on the mid cap, some of the mid cap names like Godrej Properties, but all of those stocks have run up significantly, and there's not been any sizable improvement if you're looking at the real estate demand. In fact, despite the fact that inventory levels have come down from those peak levels that we'd seen about a year back or even more, inventory levels still continue to be quite high, balance sheets still continue to be quite stretched. We would prefer to stay away at these valuations.
Right. Well, I guess I have all my questions answered so far in terms of what's happening in the markets and what I wanted to ask Natasha.
Well, in that case, that's a wrap on the market edition that we have for you. But please do stay tuned into Bloomberg Quint for more.